Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Wednesday. Fed Day is behind us. I feel exhausted. I don't know about you. I always say I dislike Fed days just because of the random, erratic, crazy trading. But, in those type of days, there is opportunity if you kind of have a roadmap and a plan. So with that said, I think a lot of us came in with some longs that look good for a reason. And sold some strength, and then when the statement started rolling out, it didn't seem as if anything was different. Okay, they're still going to taper. The economic weakness they think is transitory, meaning the weather. Some things started to turn a little bit when people perceived their comments that they might be done with the tapering by the fall versus the end of the year. So whatever they want to blame it on, they want to blame it on. So what I did coming into about 5 to 2, and I tweeted that. I said to myself, okay, there are some random moves with the Fed speaking because everyone doesn't know which way to go. So what am I going to do? I'm going to write down a few levels. So I think I tweeted the fact that this is today's low. Then you have yesterday's low of 186.50, and then the gap from Monday, which was 185.50. So I'm going to play extreme areas depending on what type of movement we have. Plus the resistance, which was today's high, and then all-time highs, because sometimes they squeeze it first to get some distribution to squeeze the shorts before coming back in. So all in all, there's a big range of trading, and then if you're holding positions, you got to trade around them too. So first things first, just if you look at the spiders, you will see that this long-term trend still is hanging well below any of the concerns of macro investors. It's held it many times, and look where we are up here. Now, the reason why people get a little wishy-washy up there is because when you get like an outside day like this, back here, and then you break an upper area, you get a percentage move to the downside, which if you're trading for P&L, that could hurt. Same way here. Remember this one last year? Head and shoulders top, move lower. Remember this breakout failure here? Okay, which is usually bearish, move lower. Then you had start this year. Remember that accelerated trend we talked about? Wound up breaking, moved lower. So anytime you get a little wishy-washy, if you're trading for P&L and you don't want to hold through things, you just got to be a little careful and know your time frame and know your risk. So all in all, still within the 8 and 21 days, still above last week's pivot and still in this upper area. You go here. Okay, let's take a look at the actual range. So this is where you get the levels from. 186.51 was yesterday's low. That's why it was something to note. And if we broke that, this was the gap. 185.51, we went 3 pennies below it. And then look at the size of the move that we had. You go to the 15-minute, or the 13-minute, you'll see, I guess you might be able to see it a little quicker or clearer. Let's go 55-minute. Back to where that was. Let's go one more time. I know, bear with me. Let's go to, let's see, time templates. Go Eastern. Okay, so this way you could see where that gap was. Okay, so here it is. It looks like a sloppy mess, but this is what happens on Fed Day. Look, push up, boom, push down, come in. So anyway, this was the gap. And here it came in, and that was a good spot if you were short, maybe to cover, and if you were looking for a scalp, get long. And if you're on my virtual trading floor, you saw I probably bought a little bit around here and sold, sold a little bit and then kept some positions. So anyway, you go back to where we are, and the day after Fed Day is sometimes tricky. So hopefully you're not, balls to the wall short or balls to the wall long. You have some positions that you like. All in all, we held in there okay. We held the 21-day, still around the 8-day. We're in this upper area. And, have some quick feet. Quick feet's working, not opinions. You go to something I talked about, gold this morning. I tried it once, and there was no rally. So what did we say? I said, look for a signal. So the trend here in gold, you have the double bottom. This was your breakout above 122, followed the 8-day. Here was the first time it broke below the 8-day. But hopefully, you saw how extended it was up here. Maybe you got out of some there. Maybe you got, put a cute short on and then covered somewhere around here. Or even if you just, said it's breaking the 8-day. It's been following the 8-day for this entire time. Last time it broke the 8-day, touched the 21-day. It's a little ways to go. Let me get out of the way. So anyway, with that said, you looked at the move in gold. I tried it once. versus the low of the day, then it broke it, and then it closed down. So now if you used it and you took a little paper cut, now you have a chance of maybe trying again. Here's the 50-day or the moving averages converging. Here is, I guess, another area. I don't know what it's going to do overnight because gold does that, but if you go to your 5-minute chart, you will see why you want to do a level versus a level, because it makes sense. Here's your gap down. Here was the low right here going across. Okay, so first things first, this was probably your stop. Okay, so what are you risking really here around 129? You're risking about 30 cents on something that fell $4, and then it got wishy-washy and broke, and that was your out, 128.76, and you saved yourself 70 cents, and now you could try it again. If you want to try it again. If you want to be long gold and you didn't chase it, and you're looking for an opportunity to buy the dip, or whatnot. So I'm just trying to give you the right way to think about entering and exiting things. Here is when it broke to the upside, your calculated long. Here's where it trended. Here's where it got faulty, and then that's where it closed. Anyway, let's move on. Some stocks. I know pre-market I talked to a lot of people on the desk saying, you know what, maybe today's a day for a cute short in Google, and look where it closed. Now it's still in this range. There's really not much to do here. You had a nice bounce from Friday. Now it took back yesterday. You could just guess draw yourself a new channel here, and just very noisy, trade lower time frames. There's like a lot of noisy charts now. Nothing. We were just talking on the desk. I'm like, I can't remember the time there was like a really clean, tight pattern that we were able to grab and stay with and close at highs, like we like to do, which is great for trading if you trade momentum. Yes, we had a trade in Microsoft yesterday, which isn't a market leader, which still was a pattern, or there's even a trade in Intel today, which I'll get to, that wound up giving another 0.5% or so above a buy price that you had to trim, and maybe you still have some left. But all in all, when the market made new highs about 2-3 weeks ago, Google didn't, Netflix didn't, Amazon didn't, Apple didn't. A lot of the names, Facebook didn't make new highs, LinkedIn's been consolidating. All these names are just floating around, and that's what happens sometimes in a market. There's just no momentum, and then you change your style with the red dog reversals and just try and take less, and you have to adjust accordingly. So with that said, let's take a look. What were we looking at there? We're looking at Google. Just real quickly, Amazon. Not much here. It's still sort of trending. This was the calculated trade here through a level. Here was your retest. Try it again, and now it's just kind of, I guess, stutter stepping higher, and I guess stay with it as long as it stays above that. Netflix, another day of wishy-washiness. At least this time it didn't make a new low. It's going sideways. If you sold up here, when it broke the 8-day, which is something it was riding since the earnings, then down in here, you could try and give it a chance. So now you have a small descending channel. At least it's now going sideways. Maybe another day or so, there could be a trade if it gets above this 426, or it continues lower and we get closer to the 50-day, which comes in around 406, and we'll see what happens. Going into social media land, it was interesting this morning when I was getting ready to come in here. Facebook, people were talking on the VTF, oh, look at Facebook, it was upgraded by JP Morgan. $80 price target, it's really not doing much. When the stock's not doing what it should be doing and not acting well, that just means that you have to interpret that. And if you look what happened with Facebook, it wound up getting hit. And you look here, still above this red dog reversal, but it wasn't reacting to an $80 price target. I know there's been 85, so just something to take note. And now there are some Facebook bears out there, and I'm not a Facebook bear, I'm a Facebook trader, that would say that that this could be the start of a head and shoulders top. And I am not saying it is. I am just pointing out a pattern just to be somewhat aware of it. Here's your left shoulder. Here's your head. Here could be the right shoulder. And if it wants to retrace and correct, look where Facebook is sitting, all the way up there. So it could happen. It definitely could happen. Just to refresh, remember the cup and handle pattern here? Wasn't that really nice? Remember that? I wish we can get that back when it was under this consolidation phase, and then boom, there was that consolidation phase, gap up, and then from here, it held above the prior support, just to give you a little chart lesson, and then boom. So anyway, where it is right now makes it a bit difficult to sink your teeth into it. A is a short because it hasn't been a short for a while, and B, because this technical pattern is getting put in place, it actually is on the right side now of this trend line, but it's still holding here. So we'll see what happens. If it starts to break below this, and the momentum names continue to, get some air taken out, it could see, the 50-day. And I think, what is that, 72 to about 67, that's what, 5 points, 67 down to here, something like that. Not a perfect world, but if the market wants to correct, that would be something that could happen there, but who knows if, it has to get there through there first. LinkedIn, everyone's like, oh, when can we buy LinkedIn? When's momentum coming back? I don't know. All I know is you have a descending channel, a few different, angles of it, and it's been correcting for quite some time now. What is this? This high was here in August. 1, 2, 3, 4, 5, about almost 8 months of downside action, but look also where it came from another really nice cup and handle pattern way back when. So it is coming into a time when it should start getting interesting. Remember, put it in the drawer, one of the three amigos, that was back here. So now you had a really nice move, and look at this descending channel where it's correcting. So I do not know if this will reemerge as a leader again. It's been public for a while. There's still a lot of opportunities. They expanded into China, but until it starts to get going again, it's just a little micro trade. And if you are a LinkedIn fan and you really love it fundamentally and you're like, I'm going to start accumulating it because I want to be in it if it does get going and I want to have something, that's your prerogative. So if it's fine. You look at Twitter. Twitter also, this had this first move. Look at this, really nice, this move where it broke this little descending channel before all the stock got loose or whatever. Beeline up. You had your break above the IPO high. Wound up hitting its peak. Then it had the earnings, remember, where it didn't increase its user base and came in, retested right here, and gave you a quick move to fill a portion of the gap. And then remember how many times I tried it in here and lost some money? Well, now it's down here, so thank goodness it really doesn't mean much to me now. It was negative to positive. There was a micro trade there. Now see how it does this. In my humble opinion, do I think that this is the high of Twitter forever? I do not think so. Okay, if you look again, you go back to Facebook, how many months did it take to figure itself out in here? You're talking July, September, November. You're talking quite some time before it went. LinkedIn also had to prove it can make money. Look how long it had to stay in this range. Yes, it came in lower, after the first, I don't know, it's 5, 6 months, and then it held higher and got more constructive before going. So with Twitter, it's sort of, still in its infancy. It only had one report. So don't, start throwing in the towel here. At some point, maybe the technicals will line up and it can go. But for now, if you're in it as an accumulate because you think over time you want to be in for something like that gap up, that happened in Facebook, fine. If you want to wait till confirmation happens, okay too. So from here, something that hurt me today, Faye. Okay, this is a stock that was a new issue way back when. Gapped up, traded very well technically. Look at that nice little bull flag, came up, broke above here, reversal pattern, and we sort of thought that it was in a descending channel. So all of us cheated a little bit. We did. We cheated a little bit because we saw this green arrow. Okay, so make this bigger. We all cheated a little bit saying, look at this, first green arrow, because look at the last time the green arrow happened. Boom. Green arrow, acting okay, and I know a lot of us took it long, saying, okay, maybe it's priced in the lockup from 95 down to here, and then we came in, and boom, that hurt. So for me, I got out pretty quickly. I think I got out somewhere around 75 because I was not a FireEye fan. I don't know enough about it. I was playing for tier 1 here, tier 2 there. Instead, I got stopped out there, and it is what it is. I didn't turn it into a disaster. Just wound up being a loss, and it helped ruin or start the day off on a bad foot. And now it closed on a dead low. So maybe wait for some type of red dog reversal if you want to try it again. But you have ways to salvage a situation where you don't turn it into a disaster. And today this could have been a disaster, and I think it was for some. For me, it was just somewhat of a loss. Let's move on. What did act well? The banks. Bank of America, pretty darn interesting. Had a really nice day. It was one of my longs that I came in with today, and one of my longs that you see on my disclosures when you read Darcy's awesome note about today's action. Will it make new high? Like, this is one of the things that say, wow, the market must be pretty decent. If this is right back at highs, maybe it continues. So that's something on the brighter side. It actually came in, remember this was a really nice trade as it tested this spot. Boom, right there. And now it's right back at the high. So that's something to look at. If the market's going to, if the market's going to hang in there and go, this should be at new highs before a lot of other things, considering it's above the 8-day. It's one of the strongest banks. Citigroup perked up, but look where that is. That's not leading. Goldman Sachs, also Doji, that's not leading. But then you have some, I think some of the regionals. Let's see, what are they doing? Key, look at that. Some of the regionals are doing well without the market yet. Key Bank, you can name a few. I don't really follow these as much. Maybe STI, there you go. SunTrust, and then there's some others. So there is some pockets of strength. And the market's proved that no matter what volatility we have, if you have some core longs that you stay with for multiple months and you trade using a tier system, there are ways to stay involved with hedges just because that's what you do. And every time you go all in or all out and then the market comes back quicker than you thought and you're left flat-footed, that could be frustrating. If you keep getting frustrated that way, hold some if you can handle it. And then if they break out, you add. And then if they go, you could sell and then you stay with. Like, for example, today, Intel. Intel, not a barn burner, but something to do today. You had, you had your tier 1 here. I know I added at 25. And then I sold a little bit, 25, 15-ish. And then I held some that I had here. So you made a trade on top of, if you were thinking Intel is going to continue higher, on top of a current position within this channel. And then now you'll see if it goes. Who knows? It held in there okay, but we'll see what happens next. Microsoft also the same thing. Microsoft, if you were in a tier 1 in this channel saying, wow, Microsoft's holding well, and you added right when it broke out above this area, or you added even another trade when it broke out above the prior high. So tier 1, tier 2, maybe another cash flow trade, you sold some strength, and then you went home back with the tier 1 you had, you caught a nice trade, and you're still in Microsoft, and now you get to watch it hang out, and let's hope that today's low is the low here, and then at some particular point, if the market hangs in there, it could go again, because it did have a nice breakout and held in somewhat well. So with all that said, I think I only said with all that said like 7 times. Usually I say it 15 times, but give me a break. It was a long day. The action had some pluses and minuses. It was pretty much a typical Fed day where you had erratic, extreme moves that if you had a game plan and you knew where support 1, 2, and 3 was and where resistance was, you could have made some money in that volatility besides what you were holding, but you probably can only do it if you had the levels in front of you and you weren't over-emotional and caught in bad trades and back against the wall. So after today, hopefully you brought it back down to something you can handle, so then moving forward, you could take advantage of opportunities. And I think there are things to own and there are things to be small in, I think, no matter what, because tomorrow sometimes is the opposite of Fed day, or you get some kind of trend day. We'll figure what that is tomorrow. There's some things that are hanging in there. I don't see that much momentum. I see some breakouts. They're far and few between. I see some areas to be long, some to be short. It all is based on what you're looking to do. I tend to like to find a bunch of longs and stick with them and trade around them. And if things get faulty, I go back to cash and I try and be short, but I'm really not that good at it. I did get back in BlackBerry today as I'm thinking about it. Not the greatest pattern, but it did hold this lower support and it did cross above this pivot and try to reclaim the moving averages. Let's see, was there any volume today? Because it was pretty strong all day. A little bit, not really. So it's still here, and I still think that there could be higher prices. I know last month I got a little hurt in this because I caught this move and then I was in here. I was thinking it would happen sooner than later, and when it looked up here, it looked as if it was pent up and it was not going to be BlackBerry. It was going to be some awesome trading tech stock that could continue and squeeze the shorts, and didn't happen. It became BlackBerry again, and boom. Let's see, what else did it do? Come on, all the way down to finally a little bit of an update. So now we'll see. Maybe because the quarter's over on Friday, there's a lot of puts and calls at 10. So from here to 10, that's a nice percentage. I wouldn't be too big in it, but it did show some relative strength today and tried to be strong. And it was one of the things that I bought the dip when we pulled in. And there you have it. Today is Wednesday. It is hump day. You have the Fed behind you now. We have some erratic trade. I know that there was an email sent out to everyone that used to get my morning note just in case you missed it. I know we were getting a lot of emails of saying, oh, you know what, I forgot to sign up for the All Access. I really miss it. So I believe an email was sent out that if you're on the prior note, we went back to that $149 special. If you didn't get it and you were on the note, email customer service at T3 Live, and I think the special is till Sunday. What this special is, it's my note that I write every day. I'm in at 6:30 putting it together for me, for my game plan, and for what I need. And then as I'm doing it, you know, it gets put into a nice, pretty package by John, the editor-in-chief, and we try and get it to you by 8:30. Within the morning call video, me and Brittany give you visuals of, I would say, 2/3 of the stocks that I write about in the morning note, because some people like to read and some people like to see and see a visual. And then I do have a private Twitter feed where I try and post some ideas and what I'm thinking. I'm on regular Twitter, and I'm trying to get the balance. I only have 2 friggin' thumbs, and I trade all day long, and that's how I make my money for a living. So bear with it. It's not an exact science. And I don't know where I started with the thing, but we sent out another email, and if you got it and you want to make the choice and come in, great. If you've been in for the last week and a half, thank you very much for making that choice, and hopefully you're enjoying it. Hopefully I'm adding some value to you, and it's only going to get better, in my humble opinion, because we're figuring it out and we're all over it, and we want to make sure that we can help you navigate the market together. If you're on the VTF and you don't get the morning note, customer service, especially if you have a yearly subscription, because if you have a yearly subscription on the VTF, the regular All Access is included. So that's it. I'm going home. I'm hungry. I defrosted a steak. I got to play with the dog and see the kid later.